In this week's currency update, it's been a big week in foreign exchange markets, with the US dollar confounding most commentators, dropping to 5-month lows. Now, a key driver for this was the so-called Fed dot plots, or guidance from the Federal Open Market Committee meeting this week about the future path of interest rates. At the last key policy meeting in December of last year, the Fed projected 4 rate hikes this year and 4 next. This week, that dropped to just 2 this year and 4 next year. That drew a sharp improvement in risk sentiment around global markets. The S&P closing above 2040 for the first time this year. West Texas crude closing above $40 for the first time since December, and copper above 50.75 for the first time since November. Now, the Australian dollar has arguably led the charge higher in foreign exchange markets, up 7% so far this month. Now, there's a number of factors that have driven this move in the Australian dollar. The weaker US dollar, stronger commodity prices, improved risk sentiment. We're seeing more quantitative easing announced by central banks, including the ECB last week, that increased its asset purchase program from 60 to 80 billion. And finally, stronger than expected Q4 GDP growth in Australia have all driven this move higher in the Australian dollar. Late February, the Australian dollar closed at 71.40. Last night, we traded as high as 76.57. The Australian dollar is the strongest currency so far this month within the G10 group. Now, while that move sounds large by historical standards, we have to remember that commodity prices are indeed significantly higher. Westpac's export-weighted commodity price index is up 9% so far this month. And if iron ore continues to hold above $50, then it does feel as if the move is justified by higher commodity prices. However, we've seen a number of senior RBA officials in the last couple of weeks express a desire to see a weaker currency. They include Guy Debelle, Phil Lowe, and John Edwards. Now, Tuesday next week, RBA Governor Stevens is due to speak at a forum in Sydney. And foreign exchange markets will be watching very closely for any additional guidance on this move in the Australian dollar. That speech dominates an otherwise very quiet week, with no top-tier data due to be released here in Australia. Indeed, the global calendar is similarly very quiet, so we'll be watching for commentary and speeches from Fed governors too. In the short term, we could still see the Australian dollar push slightly higher, and a move above 77 cents is still possible. However, Westpac is continuing to forecast the currency lower and expecting 70 cents by the end of this year. We do expect the Fed to raise rates in June, and that will not be the last hike this year. We also expect to see commodity prices lower in the third quarter. These are all factors we can talk about in next week's currency update.